field. One of them, of course, is all the weight that we're now throwing around in the world. We are threatening or leading the charge to sanction Russia. We are fining foreign banks in Europe, most recently a French bank, big fines for violating American laws, and we're able to punish them because they're using the dollar as the reserve currency. And more recently, the FACTA went into effect in July, which makes it even more expensive for the world to use the dollar as the reserve currency. But we count on the world embracing the dollar, stockpiling our dollars, because America's standard of living is dependent on our ability to export dollars that never come home and to import capital and consumer goods.
Right. That's exactly right, Peter. I like to say that the only way you win a currency war is by keeping out of it. Basically, if you're in the currency wars, everyone loses, although it can kind of take different tempos. But you make a very important point. A lot of people say the U.S. dollar is not backed by anything. It actually is backed by one thing, which is confidence. If people have confidence in it, they think it's money, then it's money. The problem is if they lose confidence, then it can cease to be money very quickly. It can collapse very quickly. Now, the problem with confidence is it's fragile. It's very easily lost. Once it's lost, it's very difficult to regain. And that's something the Fed doesn't understand. The Fed, the Treasury, other branches of government that are using the dollar as a weapon, exactly as you described, they take confidence for granted. They assume because the dollar is king, it will always be king, nothing can stop it. And so they, as you say, throw their weight around, but they're actually in the process of undermining the dollar. They're giving the rest of the world reasons to head for the exits. Now, it's easier said than done. You can't get out of the dollar overnight. It is the largest, Treasury bond market is the largest liquid pool of investable assets in the world. By the way, that's a source of a lot of confusion. When people look at the Chinese yuan and what's going on there, they see these bilateral deals with China and Brazil, China and Russia, where they're going to take payments in yuan, or people will buy their goods in yuan, or they can use yuan to buy other people's goods, etc. Well, that's a trade currency, but that's not the same as a reserve currency. To be a reserve currency, you need investable assets because your reserves are just your savings. So you export a bunch of stuff, you buy stuff abroad. If you export more than you import, you're going to have a surplus. Those are your savings, no different than anyone's savings account. Well, you can't stick it under a mattress. You have to invest in something. What makes a reserve currency is the pool of investable assets. So right now, the Treasury market is still king. But the whole world is looking around saying, how can we get out of this? How can we create new assets, perhaps new currencies, developments with the BRICS banks? People, once you start accepting yuan, you're going to look for something to invest in. So all these things are in play.
Let's get in there, because first of all, it's not like there aren't plenty of reasons to already want out of the dollar. It's not like we have to create new ones, but it's so ironic that that's how arrogant we are. I mean, how much we really don't understand the precarious position that we're in when it comes to the rest of the world, that we're actually antagonizing them when we should really be sucking up to them. But you mentioned the BRIC banks. I mean, here there's an effort now going on with China predominantly, but also some of the other BRIC nations, to create their own version of the IMF, which is going to be mainly backed by China, which has got trillions of dollars, of course, in reserves. So China can really do what it wants, but to really create some independence and to allow China to increase its influence among other nations by saying, look, you don't have to suck up to the United States or the IMF, because we're here. We're an alternative to that.
Well, you're right, Pierre. A lot of people do want to get out of the dollar, but it's like saying a lot of people want to get out of prison, but it's easier said than done. So what the world is doing is organizing a jailbreak, if you will, to get away from the dollar. And all the things you mentioned and a lot more are all sort of straws in the wind, but if you connect them all, you can see this pattern emerging. So number one, the BRICS banks. So Brazil, Russia, India, China, South Africa, the 5 BRICS members, started this bank with a $100 billion contingent reserve arrangement. So let's say you're Brazil and I'm India. I have a currency crisis. Well, I can borrow money from you, or you could lend money. China could lend money to either of us, et cetera. And that prevents these sort of run on the bank. Remember back in the early 90s when George Soros famously broke the Bank of England. Well, these reserve banks are going to make sure that they can't be broken, or the currencies can't be broken, because they've got a big brother who will ride to the rescue. Now, interestingly, no sooner was this BRICS bank set up than China entered into a bilateral swap agreement with Switzerland. And I found that fascinating, because now the Swiss National Bank and China can swap yuan for Swiss francs. Suddenly, China can get their hands on as many Swiss francs as they want. They could lend Swiss francs to Brazil, because a lot of people say, well, what good does it do if China lends yuan to Brazil? What's Brazil going to do with the yuan if nobody takes them? Fine, but now suddenly they could show up with Swiss francs. there's nobody in the world who won't take the Swiss franc. So,
And of course, there's a lot more francs now because of all
Correct.
the euros the Bank of Switzerland has been buying
Exactly.
to keep the Swiss franc down, much the way the Bank of China has had to buy dollars to keep the yuan down. But also, you mentioned these bilateral currency deals. These are happening all over the place now.
Correct.
You're seeing a lot of countries now, particularly with Russia, and their desire now to get out from under the U.S.'s pressure that we're putting on them. By necessity now, they have to find ways to conduct commerce without involving dollars. But you're seeing it in Asia, you're seeing it in South America. I mean, this is a big trend.
Well, it is, and we're in a financial war with Russia. There's no other way to understand it. This is not just sort of, superficial economic sanctions. We're at war with Russia without firing a shot using financial weapons. Now, President Obama spoke about something. He hasn't done this yet, but he spoke about something, and Putin was more fearful of this than anything else that's been talked about, which is cutting off Visa and MasterCard dollar processing in Russia. Because, Russia in the 90s, when, communism fell in 1991, they went to free market. It was very chaotic. Well, they didn't have a mature banking system. They didn't have a credit system, consumer credit. So MasterCard and Visa came in and set up this whole system. Now, they're utterly dependent on it today. Now, Putin's, people say, why is Putin doing what he's doing? He doesn't care what Obama thinks, but he does care what the Russian people think. His popularity is about close to 90%.
The opposite of Obama's, which is now down at 40,
Obama's
record
plunging
low.
to 40, but Putin's pushing 90. But if you cut off Visa and MasterCard, watch the Russian people turn on them, because that hits them in the pocketbook. That hits them.
Well, I read something that he's working out a deal with a Chinese credit card company.
He's doing a couple things. Number one, he's told MasterCard and Visa they have to put up a multi-billion-dollar security guarantee. So if they do suddenly cease payments, he's going to seize that guarantee and use it to kind of keep the wheels wheels in motion. But the other thing he's doing, you're right, Japan, China, and others do have mature credit cards. In China, I think it's called the Unicard, if I'm not mistaken. But they have a very well-developed credit card. You could bring that to Russia. So combine that with the petrodollar deal. The Saudis feel stabbed in the back because of U.S. détente with Iran. So all of the legs of the stool are being pulled out. China wants to get out from under the dollar. They're buying gold. That's very clear. Russia wants to get out from the dollar so they're not victimized in the financial war. Saudi Arabia wants to get out from under the dollar because we don't guarantee their security anymore. And there's a lot else going on. The Swiss are joining in. So it doesn't happen overnight. It happens in small stages. But at the end, in the end game, it could happen very quickly. And any investor who doesn't have some gold as an insurance policy is taking enormous risk.
And I think that Obama is overestimating our strengths here, or underestimating our weaknesses, because we're not equipped to fight this financial war, given how dependent we are on foreign capital flowing into the country. So we really can't win this war. And it seems like the president is very arrogant, and just like he made mistakes about Obamacare and the assumptions that he made there, and even the assumptions with Iraq. I mean, he was so confident when we pulled out of Iraq that everything was going to be fantastic over there. How arrogant and ignorant at the same time to not understand the situation that existed there, despite all of the military intelligence and all the experts that he had. And so I think he's making an even bigger mistake playing with fire here by trying to challenge the world to a financial war that we can't win, that we can only lose. But you mentioned gold, and I want to, of course, talk a little bit about gold. And first of all, what about internationally? If the world really wants to get out from under the dollar, which of course is the single largest reserve currency, I mean, not as big as it was, I mean, you would think that they would want to be building up their gold reserves, that the countries that have the biggest dollar reserves would have the biggest vested interest in accumulating as much gold as they can to replace the dollar as a reserve backing up their own currencies.
Well, they actually are. That's going on. I talk about this in my book, The Death of Money, and China is a very good example. Now, China officially says they have about 1,000 tons of gold, but we all know that's not true. They have some number. No one knows exactly what it is, but you can make a reasonable estimate that they actually have 3 or 4 or perhaps even 5,000 tons of gold. Now, that's not just guesswork. How do we know that? Well, we know what their mining output is. It's over 400 tons a year. We know what their imports through Hong Kong are. They're about 700 tons a year. So you add that up, there's 1,100 tons. And I have information I talk about in my book that they're bringing gold in actually through military convoys coming in through Central Asia. That could be coming from actually Russia or Kazakhstan or elsewhere. So add that to the mix. So they're getting probably 1,500 tons a year. This has been going on for 5 years. So that's 7,500 tons. What we don't know, how much of that is going to private investment in China, and how much of that is going to the government. We don't know that number, but just use half and half as a first approximation. So right there, that would add over 3,000 tons to China's reserves. So they're probably close to 4,000 tons. Now, there's been a lot of speculation that the reason they're doing this is they want to launch a gold-backed yuan currency to defeat the dollar. That's not going to happen. That's not even close. And the reason is that yuan's not ready to be a reserve currency because they don't have investable assets. There's no rule of law. There's no mature bond market in China. But what they are doing is creating a very simple hedge position. You're a trader. You certainly understand how this works. So you've got $4 trillion of paper reserves, mostly in U.S. dollars. You can't dump them. I mean, if you even try to sell a fraction, the Treasury market's big. It's not that big. If they try to do something more aggressive, the President of the United States can actually stop them just by freezing their accounts. But what you do is you build up a pile of gold. So now the Chinese actually want a stable dollar. They would love a stable dollar. But if the U.S. tries to devalue the dollar, tries to cheapen the dollar through inflation, remember, every 10% of dollar inflation is a $300 billion wealth transfer from China to the United States. So if we cheapen the dollar with inflation, they'll lose money on the paper, but they'll make money on the gold. Yeah. So they're building a hedge position. They're not done yet.
And of course, for the hedge to work, gold has to move up spectacularly. Correct. You have to have a very, very big, because their gold position is going to be very small relative to their dollar position. But if gold moves enough to offset the decline in the purchasing power of the dollar, and I think it's interesting because I think that's why China is trying to really lie about how much gold it has and how much it's been buying. Because if the truth were out there on how much gold they have, I think the price would already go up. So if you really want to buy something, you don't want people to know how badly you want it or how much you want because they're going to raise the price. So I think China is trying to quietly buy as much gold as they can because they need a lot of gold because they got a lot of dollars. So they're trying to buy as much as they can, as cheaply as they can.
Correct.
So they lie about how much they have. I think we also lie, but maybe we pretend we have more than we do. That could be, so we say we have all this gold and maybe we don't, and China claims they barely have any, but they probably have a lot more.
Well, I think we have good reason to believe we have the physical gold. Now, is it leased out? Yes, that's the thing. Now, so it's hypothecated. We have the physical gold in Fort Knox and West Point where we say we do, but it is leased out. The gold manipulation, by the way, is so blatant at this point. If I were the manipulator, I'd be embarrassed because it's very clear. To me, that's non-debatable. And also, Branches Metz, a professor at NYU Stern School, has done some excellent research on this. She's an expert on this. There are other published studies. So this isn't something we have to speculate about anymore. The question is who's doing it, and people like to point a finger at the Fed, and maybe through the BIS they have a hand in it. But my number one suspect is China, for the reason you mentioned, Peter. If you're out to buy 3,000 tons, you don't want the price to be high yet. Maybe later you do, but for now you want the price to be lower.
Not while you're still buying. But you bring up that. I mean, why didn't the situation with Germany and Germany's gold? And so not only do we spy on Angela Merkel, right, but we don't even have their gold. I mean, why isn't there a bigger uproar? And what do you think is going on when Germany basically says, look, your guys are storing our gold. We'd like half of it back.
Right.
And then we come back and say, okay, we'll give you half back, but it's going to take like 10 years.
Right.
And here's our timetable.
Right.
And at the end of the first year, we give them 1/10 of what we promised we're going to give them. And now all of a sudden they've changed their mind and say, okay, we don't need it. You can keep it.
That's another thing that's not very well understood. The dirty little secret there is Germany doesn't want the gold back. They asked for it, but that was only because it was a political issue. In September 2013, Angela Merkel was up for election. There was a minority party that was making noise about this, saying, why is our gold in New York? Why are we risking? The U.S. could confiscate it, which I think we might at the end of the day, in desperation. So so that was only announced to appease that party to help Merkel's coalition. Once she won the election, they didn't need those guys anymore. The Deutsche Bundesbank doesn't want the gold, but here's why. They're part of the manipulation. But the manipulation is centered in London and New York. London and New York have mature leasing markets. Frankfurt doesn't. So if you move that gold from New York to Frankfurt, it actually reduces the floating supply available for lease because nobody's going to do a German language lease. There's no leasing market in Frankfurt. So if you're part of the manipulation, which they are, you actually want the gold in New York because that's where the manipulation is centered. So it's sort of, the Germans don't want the gold, but the reason they don't want it is a bad reason, which is they're part of the manipulation, and New York is the center of that.
But the question is, could we have delivered it, or did Germany know that we weren't going to deliver it?
Well, again, there's a lot of confusion about this because people don't understand gold leasing. They think if J.P. Morgan leases from the Fed, which they do, that somehow they back up a truck and take the gold away. They don't. The gold is there. But they get paper title to it, and that's all you need. And then you go out and sell 10 times the paper title and the so-called unallocated gold through the London Bullion Market Association. Now you're flooding the world with gold contracts. All these people out there say, well, I own gold. They don't own gold. They have a paper bilateral contract with J.P. Morgan. If they all showed up for the gold, J.P. Morgan would terminate the agreements under force majeure clause. give everyone a check at yesterday's price. You would not get today's spike, and there's nowhere near enough gold to go around. So there's manipulation galore.
Yeah, well,
but it's a
basically,
little more sophisticated.
it's all basically they've sold the same gold over and over again,
Correct.
and you have all these people who think they own. It's kind of like that the movie The Producers, where the guy he assumes the movie's going to flop, so he sells interest to so many people, and then when it's a hit, they all come back and they want their share. But of course, they've oversold the deal, and it's the same thing, or maybe it's like a bit of a Bernie Madoff or some kind of a scam. But what about Switzerland? Because I don't know when this vote is supposed to come up, but now the Swiss, right? They have a referendum coming on the ballot to back the Swiss franc. I think 10% by gold. I think is that it used to be legally backed by gold 20%.
They would want to do two things. Number one, this referendum, but they have an open system. You get enough signatures on a petition, you can get on the ballot. I think this vote is scheduled for early 2015. I was in Switzerland recently. My last trip to Switzerland, I didn't see any banks. I went to gold storage. I went to gold vaults and gold refiners, the people handling the physical. But I bumped into a very senior Swiss banker at the time. We just asked him about this. He said, "Oh, it'll never pass." But you know what? There's a little nervousness in his voice that I detected. So let's watch that space. But what this referendum would say is that, first of all, Switzerland cannot sell any more gold. Switzerland has been a big seller of gold the last 10 years, and they've been part of the price suppression mechanism. But then it would furthermore say, exactly as you said, Peter, that the Swiss franc has to be backed by gold in such a proportion that they would actually have to go out and buy gold to fulfill that backing function.
Well, especially because they've bought so many euros in the past 4 or 5 years.
They had to print the Swiss francs.
Look, it's interesting that all the bankers and politicians are against this.
Right.
And these are the same guys that would have been in favor of it, 20 years ago when Switzerland really was the last country to leave a gold standard or break any tie between its currency and gold. And the Swiss franc really was, the gold standard of currencies, right, until then. But the Swiss people pride themselves on sound money, the Swiss banking system. You would think that they would embrace it, but they're scared because the bankers want to play ball with the European bankers. They want to play, with the Americans. They don't want their hands tied. But from the point of view of a citizen, of a saver, that's exactly what you want to do. You want to tie up the central bank's hands. You want to tie the government's hands down, bind it in golden handcuffs so they can't create all this inflation. They can't undermine your economy, inflate bubbles.
No doubt that the bankers and the elites are against this, but the people of Switzerland might support it. And there might be an interesting connection, actually, between what happened in Germany and what's going to happen in Switzerland, because the Swiss are sitting there saying, hey, the Germans couldn't get their gold back. There might have been bad reasons for that, but they couldn't get their gold back. So that might cause the Swiss people actually to vote in favor of this. So let's watch it, but I think it'll be early 2015. We'll know then.
Plus, the price of gold has been trending up for the last 13, 14 years. Last year, notwithstanding, it's up again in 2014.
Right.
And so the Swiss are selling their gold, and they're losing money. The gold that they're selling is more valuable.
Great. I actually did, all these calculations are in my book, but they've lost billions dumping their gold. And by the way, 2013, you're right, it was the first year in 11 years when gold was down. But that's because the big banks looted the GLD warehouse. The GLD, that's the ETF, that warehouse disgorged 500 tons of gold onto the market. That's over and above mining output and other sources. Well, you can't do that twice. You take another 500 tons out of GLD, there's not enough left to pay the bills. So that was a one-time event. We're not going to see that, and you're right.
Well, and the other problem for the speculators, because the people who bought GLD, they're going to be back. Once the trends change, the hot money is going to want back into gold.
Correct.
The problem is the gold's not going to be there for the GLD to buy.
Right.
So when the speculators want in, and a lot of these guys are actually now short. So wait till they have to cover. Not only the buying from the short covering, but you've got buying from the new investor hot money. Typically, right, when things go wrong, right, people seek out a safe haven, and the U.S. Treasury market has been the safe haven. But at some point, it can't be the safe haven. You can't bid Treasury prices to the moon. The yields are too low because pretty soon the safe asset becomes so risky that nobody can touch it.
Right.
So at some point, the flight to Treasuries can't go on. So what are you going to buy when you're worried, when it's too dangerous to buy Treasuries, especially if the next crisis is a dollar crisis? You can't hedge dollars in Treasuries.
Right.
Right. So you got to buy something else.
Down,
so
right?
you got, which brings me to, I wanted to ask you also about the ending of the London fix.
Yep.
The scandal there involving the AM/PM fix in London, now the silver fix, and what does that mean for the gold market if we move beyond that? And was that part of the manipulation? Did that in any way help to suppress the price of gold?
Well, it did. I mean, the London fix was a sort of a manipulation within a manipulation. So that was a little ring manipulation within the much larger manipulation conducted on the COMEX and through leasing and intermediated through the BIS. You know, the BIS are a bunch of sweethearts. They fronted Nazi gold during World War II. The Nazis were selling gold to the BIS to get currency to buy weapons and other imports. And the president of the BIS at the time was an American. So you had an American president of a bank fronting Nazi gold to get money to kill GIs. That's how corrupt they are. So a bunch of sweethearts over there at the BIS, but they're in the heart of this thing. But yeah, no, I think you're exactly right. This will, you know, the London gold fix is less and less significant. Look, the whole gold market, not just the gold, but the gold market is moving to Shanghai. The vaults are there. The refineries are starting to crop up. They've redefined good delivery. You know, good delivery is the old 400-ounce bar. The 400-ounce bar was specified almost a century ago because it was so inconvenient. They didn't want people with gold in their pockets, so they came up with a good delivery that nobody could carry around. The Chinese are going to the 1 kilo bar. 400-ounce bars can be what they call 2 nines, 3 nines, you know, 99% pure. The 1 kilo bar that the Chinese like is 4 nines, so that's 99.99% pure. That's the new standard. So the vaults, the refineries, the gold standard, the trading are all moving to Shanghai. They're rewriting the rules.
Well, it makes sense. Look, the savings are there, the productive capacity is there, the economic freedom is there. And just like America, you know, when we became the most powerful nation because we embraced freedom in a way that had never been embraced before, and we became wealthy because of our free markets, we had all the gold, right? That's why the dollar became the reserve currency, because we had so much of the world's gold. But we've lost all of that, and it makes sense that the nations that have gained what we lost are now going to take the gold, right? The gold is going to flow from the debtor nations of the West, right, the welfare states, to the new freer markets, dynamic savings producing nations in the East.
Correct. In 1950, the United States had 20,000 tons of gold. Today we have about 8,000 tons. So that tells you the story right there.
Yeah. Now also, you know, there are some people that argue that, look, the new gold are these digital currencies that, you know, Bitcoin, people are saying is, you know, this is gold for the digital age, gold 2.0, that, you know, as these paper currencies fail, right, as all these, and we have these currency wars, and, you know, I think the ultimate winner is gold, and certainly the death of money is the best thing for gold, because gold will never die. Gold is real money. But now you have people claiming that, no, that Bitcoin, or, you know, maybe some other currency, but certainly the most people are behind Bitcoin. They have the biggest user base, the most fanatics behind Bitcoin, saying, no, this is, Bitcoin can work. Bitcoin can now replace the dollar, the euro, the yuan, the yen, that the world can have confidence in this. And so the currency wars, or this inflation, is going to ultimately move everybody into cyber currencies that are created privately, that are not beholden to governments and central banks. What are your thoughts on Bitcoin?
Well, look, anything can be a currency. The question, but you put your finger on it, Peter, do people have confidence in it? At various times in history, shells have been currency, feathers have been currency, beads have been currency. So anything can be currency, and Bitcoin can be a currency. But only if people have confidence in it. And the same is true of the dollar or the euro or anything else. And now, I have a number of problems with Bitcoin. Number one, if you ask somebody what a Bitcoin's worth, they'll say, it's worth $500 or $200. Well, I said, wait a second, you're talking about dollars. Now, even the dyed-in-the-wool Bitcoin advocates will express the value in dollars. So I'm saying you're really tied to the dollar standard whether you like it or not, number one. Number two, Bitcoin has not been through a business cycle. It's just been a very weak recovery, but the economy has only gone up since the invention of Bitcoin. So we don't know how Bitcoin will perform in a panic. We don't know how it will perform in a downturn because we haven't seen that. Third problem I have is that people don't understand the tax aspects of it. If I buy a Bitcoin for $200 and I cash it in for $300 of goods and services because it went up, I have to take the 100 difference and put it on my tax return as a gain, no different than if I bought IBM and sold it at a profit. I've got to report the Bitcoin gain. Well, I dare say no one's doing that, or practically no one's doing that, which means all the Bitcoin users are tax evaders. We know the IRS is used for selective political enforcement. We know how corrupt the Justice Department and the IRS are. So I'd hate to be a Bitcoin guy with unreported Bitcoin gains in my tax return, where the Justice Department selectively comes after me. So that's one
and
more
especially
thing
when they get you with your interest and late penalties.
Correct.
Because that ends up being more.
And we know the NSA is looking over your shoulder. So there's a lot to think about with.
Well, the real problem that I have with it, first of all, you have over 400 now other digital currencies. So the supply of digital currencies seems to be infinite because they keep coming up with them.
Sure.
Maybe they'll come up with one that's better than Bitcoin. Maybe they already have. I mean, who knows? Just because you're the first doesn't mean you're the best. But the real problem is, absent a unit of exchange, there is no value in Bitcoin because there's nothing that you can do with it except give it to somebody else. People overlook the historic value of gold as a standalone commodity because people desire the physical properties of gold. Even if you aren't going to give your gold to somebody else in a transaction, you can use it. Right? Gold has a use. There are properties that make gold desirable, even if it wasn't used. But if you have a Bitcoin and if people lose confidence in them because they no longer want them,
correct,
then what can you do with it? Absolutely nothing.
Right. There's no floor on that. And you're absolutely right about it. Gold is genuinely scarce. People talk about rare earths. These particular minerals that are used in certain applications and engines. Gold is more rare than rare earth. First of all. And the other thing is people think Bitcoin is cool because it's a digital currency. The dollar is a digital currency. You and I may have a few bucks in our pocket when we walk around, but credit cards are digital. Payment online is digital. Electronic bank account, wire transfers. The treasury market hasn't had a paper treasury certificate since 1982. So the dollar is a digital currency. Bitcoin's a digital currency. Good luck to all of them. They're all based on confidence, and when confidence is under stress, people go to gold.
Yeah, I mean, people say, hey, we don't want dollars because they don't have any intrinsic value, so let's take a Bitcoin, but neither does it. And yeah, ultimately, I think it's going to collapse. To me, it's like tulip mania. And I think what really empowered Bitcoin in 2013, I think, was the fact that was the year that gold did poorly. And since Bitcoin kept rising, people could make the argument, you see, Bitcoin is better than gold because look, gold is going down, Bitcoin is going up, it's a better store of value, it's a better hedge. And of course, you had a big vested interest among the early adopters who got these things for nothing to spend money drumming up a market to create the sense of value and greed because they need an exit strategy. They have to be able to sell their Bitcoins, so they have to create a lot of hysteria, a lot of enthusiasm among as many people as possible. But I think the problem now for Bitcoin is that you have a lot of people that bought Bitcoins for $1,000, $900, $800. They're not so excited about it. Maybe they're hoping that it'll come back up, but when it rolls over and they're back down to 400, 300, 200, we know how people act. I think there'll be a big sellout. And then when there's a real crash in Bitcoin, and a lot of people have lost a lot of money, as you said, once you lose confidence, you really can't rebuild it. But I think the one store of value, something that has a historical precedent as being money for thousands of years, gold. I think gold is going to shine very, very brightly in this environment. Now, hopefully, I think if we can return to a monetary system based on gold instead of the fiat system that we have now, we'll have much sounder economy. We'll have smaller governments. We'll have more freedom. We'll have more prosperity. We won't have all these trade imbalances and big current account deficits, and we won't have booms and busts with all these big bubbles with spectacular rallies and even more spectacular collapses.
Right, I agree.
How much longer do you think we're going to wait, though? That's a lot of people want to know. Our clients, have been buying gold.
Sure.
How much longer do you think this can go on?
Well, the thing is, it might go on longer than people expect, and here's why. I think that sovereign banks and central banks and sovereign governments are on their last legs. But there's one card left, one trump card left for the international elites to play, and that's the IMF and the SDR, the special drawing right. Now, I know the special drawing right is just another form of fiat currency. I know it's not backed by anything. I'm an expert on SDRs. But it's new. It's the new kid in town, so they might play that trump card in the next liquidity crisis. I go all the way back to 1998 when long-term capital management collapsed. That was a hedge fund collapsing, jeopardizing the world, and Wall Street bailed it out. Now come forward to 2008. Now Wall Street's collapsing, jeopardizing the world, and the central banks bailed them out. In the next crisis, soon to come, it'll be the central banks and the sovereigns themselves who are collapsing. Now, who's bigger than a sovereign? There's only one name in the world, which is the IMF. So
but the IMF gets its money from the very sovereigns it's trying to bail out.
They don't need to get money, Peter. They can print money. That's what's so the normal lending operations, yes, they borrow money and lend it out. They have a balance sheet. You're exactly right. But they can print SDRs. They don't need to get the money from anywhere.
It's like they can add another layer to the Ponzi
exactly
scheme somehow.
Right. No, I think it might fail at the end of the day. I'm not a big fan of fiat SDRs. I'm not saying that. What I'm saying is, don't underestimate the ability of sovereigns to play one more trump card.
And then the ultimate crisis.
At the end of the day, it will be gold.
Yeah, the ultimate crisis isn't going to be the liquidity crisis, but an excess of liquidity, because all that money that's being created, that's the crisis.
Correct.
Because now the money collapses. See, everybody is worried about the asset prices going down. Oh, the stock market comes down, the real estate market comes down, the bond market comes down. But they forget, what if the dollar crashes? What if all the money they print to prop up all these asset prices collapses the currency that everybody actually wants? Because you don't really want the assets. You want what you can buy when you sell them. You want what you can buy with the income that they produce. And if you can't buy anything because they had to create so much money to prop up the values that it's practically worthless, that is the real crisis, right? And that is why people need to have gold. Because when that crisis hits, that's the one place, really for sure, that they'll be able to hide. But I still think, if you have real, tangible, productive assets in other countries, things are still going to have value. I mean, when you have a currency crisis like that, it's the paper wealth that evaporates.
Sure.
I mean, the factories are still there. The resources, the plant and equipment, that productive capacity is still there. Right. The question is, who's going to own it? Yeah. And who's going to have claim to the production, the output of those assets?
Well, the guy who's getting ready for that is Warren Buffett. Warren Buffett's last two big acquisitions were a railroad, oil and natural gas. So Warren Buffett's a guy dumping paper money, getting hard assets. The dollar can go to zero, and he still owns a railroad, exactly as you described.
Well, I wouldn't be surprised, because if you look at the way he says, he talks up the paper economy, he talks up the U.S.